Hello and welcome to MarketVisions Short Takes. Today's video is about Securities Transaction Tax and option prices. Why on expiry day do in-the-money options seem to have no time value? First, introducing MarketVision.in. We are an online financial knowledge website. We will be providing online financial videos on the basics of money, mutual funds, stocks, credit, insurance, inflation, and so on. And next step modules, which consists of stock analysis, bonds, fundamentals, charting techniques, and an advanced module consisting of technical analysis, futures and options strategies, commodities, currencies, and so on. This will be a paid subscription. It's coming your way soon. We also have Short Takes, which is a set of free short videos, each of which explains one market concept and are listed on YouTube and MarketVision.in, and they will be free. First, again, Securities Transaction Tax and option prices. A refresher of in-the-money options. We all know the option consists of two parts, the time and intrinsic value. If the strike price of the option is less than the current value of the underlying stock or index, the difference is the intrinsic value, and anything above that is the time value. For example, if the Nifty is at 6,050, the 6,000 call option may be trading at 75 rupees. The difference between Nifty and the strike, that's 50 rupees, is the intrinsic value, and anything above that, the 25 rupees above that, is the time value. Having in the same vein, if you have a 6,100 call option, it has no intrinsic value because Nifty is below the strike price of the option. There's only time value in that option. But in the money options are simply options which have a strike below the underlying stock price or index price. Closing in on expiry, the time value of an option keeps starting to come down. So if you look at the intrinsic value, that remains the same regardless. As time closes in on expiry, you find that time value goes to 0. On expiry, obviously there is no time left, therefore the time value is 0. Now let's look at what happens with Securities Transaction Tax. If you let an option expire in the money, it automatically gets exercised. The concept of an exercise is that you receive, if you hold an option, you receive the difference between the underlying price and the strike price. So if the Nifty closes at 6,050 on expiry day, you hold a 6,000 call option, you will receive 50 rupees. But this exercise attracts huge regulatory cost called Securities Transaction Tax. An exercise gives the government 0.125% of the strike price plus the premium paid by the holder of the option. If the Nifty expires at 6,100 and you hold a 6,000 call, the 100 rupees premium and the 6,000 call together will give you or make you pay 7 rupees 60 paisa as STT alone. Remember, you receive 100 rupees. You've probably paid something for the option, but you receive 100 rupees, and off that you pay 7 rupees 60 paisa to the government, which is a pretty huge percentage if you look at it. At 3 p.m. instead of 3:30, let's say 3 p.m. you decide to sell the option in the market instead. It obviously quotes at a rate. The market sale will only have an STT of 0.017%. Again, not of the strike price plus premium, but only of the premium. The same 6,000 call at 100 rupees premium has 2 paisa as STT. That's a substantial difference. 7 rupees 60 paisa if you let it expire, and 2 rupees if you sell it at 3 p.m. and 2 paisa if you sell it at 3 p.m. Therefore, on expiry day, buyers know, if I leave this option to expire, I will get a big STT hit. Time value is anyway close to 0 because we are on expiry day. Options therefore quote less than intrinsic value, and the difference is usually the STT amount. An example here in the chart that you see is that the option price is rupees 43 for a 6,000 call option, yet the Nifty is at 6,050. The intrinsic value should be 50 rupees, but it's not. It's 43 in this option because the STT causes the difference. And a lot of times people wonder if options are really cheap because they're going at less than intrinsic value. There should be an arbitrage, but there is no arbitrage. The difference is a securities transaction tax that will be paid out to the government. Points to be noted: Nifty has a pronounced effect in options. It's about 4 to 7 rupees per option because Nifty is at 6,000 today. Stock options obviously is based on the stock price. So 1,000 rupee stock like Reliance will have an STT impact of about 1 rupee 25 paisa. It looks smaller, but it's a similar percentage. Stock options, to be noted, are American stock options. Nifty can only be exercised on expiry day. So you can't exercise the option in the middle of the cycle, but you can exercise stock options on any single day. Because of that, and because of the higher volatility of stocks, usually about 40% implied volatility in the option, and versus Nifty's average implied volatility being 20%, you usually see a much higher time value of a stock option. Therefore, it may not, it may overshadow this difference in STT. So where you might find that a few days before expiry, Nifty's time values are very close to zero, a stock option may quote at a much higher time value, thus overriding this STT impact. Thanks for watching. We would love you to hear your comments, and please visit MarketVision.in. Thank you.